Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate filings so you don't have to. Today we're diving into Freeport-McMoRan's proxy statement. It's like their annual report card, but with a twist. We'll be looking at executive pay, shareholder proposals, and all the juicy details. Think of it as peeking behind the curtain to see if everyone's playing fair. It also decides what direction the company is going. This year there's a lot going on, including a CEO change, sustainability initiatives, and a vote on how much executives get paid. So buckle up, because we're going to look into it. First up, let's hear from the lead independent director, Dustin McCoy. In his letter to stockholders, he talks about solid operating and financial results in 2024, meeting copper sales targets and advancements in their projects. It sounds like a pretty good year, but as always, we have to see beyond what they are telling us. Something that stood out to me was the fire at their new smelter. McCoy praises the team's response. It's good to see they're on top of it, but this kind of event can cause major disruptions and financial strain. So we'll keep an eye out for that later in the report. Next, we have the notice for the annual meeting, which will be held virtually. It details the 4 proposals stockholders will be voting on. These proposals are electing directors, giving an advisory vote on executive compensation, approving the 2025 stock incentive plan, and ratifying the appointment of Ernst & Young as their accounting firm for 2025. Here's a handy guide to what we're voting on. The board is recommending to vote for all proposals. But should we blindly follow their lead? Let's dig in deeper. One of the key things to note is the director nominees. There are 12 with a mix of experience in natural resources, CEO roles, international business, and more. It's important to have a balanced board. One thing that is very clear, all of them have experience in big business. So small investors like us get our representation. Moving on, it talks about executive compensation. It states that their executive compensation program is performance-based, which is good. Most of the CEO compensation being tied to company performance. They provide a chart about compensation mix, and it shows that 90% of the CEO compensation depends on hitting certain goals, which is great to see. Let's look closer at those 2024 performance highlights. Their safety performance improved, copper sales met targets, and underground mining in Indonesia did exceptionally well. They say that they achieved progress in organic growth options. It's always good to see the company investing in their future and not just short gains. On the financial side, operating cash flows exceeded capital expenditures and their balance sheet is strong. This sets a good foundation for returns for stockholders. They even increased their ownership in Cerro Verde, which is a smart move. Their strategic objectives are very clear. About 50% of their cash flow is meant to be returned to stockholders, and the shareholders are already seeing returns. The distribution of $4.7 billion to stockholders is quite attractive to investors, which shows a strong commitment to rewarding stockholders. They want long-term support. The company is making an effort to have solid stockholder engagement. It is always good to see that the board listens. That's important for smaller investors like you or me. Next, we have a section on sustainability. Freeport is trying to be a responsible copper producer, and that's a big deal. They are doing this by maintaining industry standards with Copper Mark and Molybdenum Mark certifications, investing in communities, and working towards better tailings management. They say that their climate strategy is progressing. These are all things responsible copper producers should be doing, and they seem to be on the right track, especially in the current political climate, where these topics have more importance than ever. A look at the sustainability governance of the board and committees. Sustainability oversight ultimately resides with the board, delegating to committees for environmental and social policies. The Corporate Responsibility Committee plays a key role. One important element we should pay attention to is board structure. Richard Adkerson is chairman and Dustin McCoy is the lead independent director. This split leadership can help ensure independent oversight, but more importantly is what each brings to the table. Adkerson brings industry experience and global relationships, while McCoy provides that independent oversight. Looking at board composition, we can see that the board consists of diverse and qualified members. It notes the average age and tenure of the directors, which allows us to quickly determine the board's experience and potential need for refreshment. The company has added 8 new directors since 2019, bringing fresh perspectives while keeping a balance of experience. Here's what I see. Over the years, executive pay has fluctuated, and they are doing better than the peers. Net income has seen positive growth in recent years. Their return on investment has increased more than double. Let's look at the director compensation in cash and stocks. Nothing too crazy, in line with other companies of their size. Lastly, executive compensation. I think it is very important. We want to know how much these guys are taking home. To Ms. Quirk as CEO, $1.2 million in salary, all executives will be getting the rewards from hitting those AIP goals. Looking at the LTRP, we can see where most of these execs actually make their money, which makes hitting the targets more desirable. The company has key evaluation topics that they focus on, and workforce oversight and risk management materials and procedures is all mentioned. What I take away from it is that the company has a great focus on internal procedures. We need to also talk about the 2025 Stock Incentive Plan. It is a successor to the company's amended and restated 2016 Stock Incentive Plan. This plan is there to attract and retain great individuals to work for them and improve stock value. I think this is always good. We want them to have an incentive to do well. If we want to win, we want our star players to feel like they are on the same level as us. Last but not least, let's look at the auditors and auditing fees. They have a proposal to have Ernst & Young serve as the company's independent registered public accounting firm for 2025. The company board recommends we vote for it. A quick glimpse at the chart, about $14 million in audit fees to these guys, and they have been doing this for the company since 2002. There seems to be great trust in the auditing firm, as well as a heavy price tag that comes with it. Accession Freeport-McMoRan. The company is clearly focused on responsible production and sustainability, which is a huge plus. They know that's the future. The new leadership seems to be well prepared, and the board has a solid mix of experience. Their financial performance is strong, but they will need to get that new smelter back on track, as well as manage their debt. All in all, Freeport-McMoRan is steering in a promising direction. But remember, always do your own research. Thanks for joining me on Corporate Decoder. Don't forget to hit that like button, drop a comment, and subscribe for more deep dives into the world of corporate filings. Let me know in the comments below which company you want us to decode next.